Onward Opportunities Limited was launched in March 2023. It was crowned IPO of the Year at the recent Small Cap Awards, and the founder and lead fund manager is Laurence Hulse, who joins us now. So, Laurence, what is it that Onward Opportunities does? What's its purpose?
Good morning, Sarah. Thanks for having me on for an interview post what was a really special night for the team. We really enjoyed the recognition and what was a really great Small Cap Awards event. So thank you for that. What is Onward Opportunities? What is its purpose? Our purpose is to find specialist investment ideas for our shareholders, due diligence them, work out if they're good investment ideas, and then really collect them in a sort of portfolio approach, which is what the shareholders own. We are an investment company. We're listed on AIM, so investors, shareholders can buy and sell shares in the company, and the company is effectively a portfolio of what we think are good or even great investment ideas.
So March 2023 was an interesting time, to say the least, to list rising inflation, interest rate rises, geopolitical tensions. Now, this was the year that the number of companies listing on the London Stock Exchange was down by almost 50%. So did those market conditions suit the purpose that you've just told us about?
In many ways, yes, but very much a double-edged sword. When I made the decision to resign from Gresham and launch this venture, this idea, Onward Opportunities, the polite comments were, well, that's brave. And to be brave, you've either got to be stupid or quite calculated. And hopefully we're sort of demonstrating we're the latter. It was and kind of remains a tough UK small cap market, but March, April last year was the nadir of that. The day the IPO book was supposed to close, Silicon Valley Bank went bust. I quickly developed a few more wrinkles and grey hairs. We gave our investors a bit of a week to digest that, and that gave time for Credit Suisse to go under too. So not an easy time to raise capital, especially for a UK small cap fund. But indeed, the reason behind the timing of doing this was the same reasons that made raising money so hard and the market so difficult were the same reason that we could, back to our purpose, aggregate a portfolio of investment ideas that could generate a lot of value. Because the same reasons that made it very hard for companies like Onward Opportunities to launch were the same reasons why UK equities were and remain so cheap. That sort of bear market negative sentiment is creating fantastic value opportunities for brave investors, of which we are. And you're seeing that in the early portfolio performance with the NAV up sort of 20% over the past 12 months, which compares favorably to a lot of other sort of asset classes and indeed peers.
But no business surely likes to be known as cheap. So I'm just wondering what it is that you invest in and what are the risk profiles of your holdings?
It really is quite an eclectic mix of ideas and opportunities. That's why opportunities is in the name. And the reason why we have a snow leopard in the logo is that they're crepuscular. And that is a word I didn't know 2 years ago. And that really means snow leopards, they're active at dawn and dusk. And that's really how we think as investors. We try to find stocks that are cheap because we've discovered the opportunity first. Things like Impact Group are recent examples of that, or dusk. And indeed, as an investor, we do look for opportunities where perhaps stocks are cheap because a lot of people have given up, grown tired, and the equity stories become misunderstood or indeed slightly overlooked. What that's resulted in a portfolio, the one we've built for our shareholders, is a mix of, dawn type mentalities and dusk. Something like a Springfield Properties trading at a deep discount to book value. After a tough couple of years for house building, it's a house builder. But now we think that sort of journey is over and perhaps the shares are overlooked and offer value. And so far that's been the case. The shares are up about sort of 30% from when we bought them and still trade at a pretty clear discount to book value. And then you've got some sort of dawn type mentality in there too. Transit Technologies, fantastic, exciting components and IP for the aerospace, motor and robotics markets. MPAC, designer of sort of automated packaging lines, a real reshoring theme emerging there that we spotted. And again, the shares have performed really healthily over the past 12 months.
So talk to me about your nursery holdings. What on earth does that mean? And when do they graduate to core holdings? And are you there to help nurture them along that pathway?
So the nursery very much is what it sounds like. These are sort of emerging, nascent investment ideas that we think we've spotted something and our work is ongoing. And listeners will understand investment conviction isn't sort of binary, or certainly not if you run a sort of detailed due diligence process like we do. Your conviction and confidence tends to build as the work progresses. And the nursery allows us to take a smaller weighted position at that earlier stage of conviction to perhaps capture some early upside, which the rest of our sort of due diligence and work might take longer. But then accordingly, once we've got that higher level of work complete and hopefully conviction, holding might graduate and become a core holding, which is a bigger conviction stake in the business, a higher weighting in the portfolio. It's worked pretty effectively for our strategy. There's been a couple of historic examples, and indeed in Onward's recent history, things like DX Group, where we were doing our early work, we thought we'd spotted value, and as our more in-depth due diligence was progressing to try and make it a core holding, someone else spotted the value we had and actually bid for the company. We would have been pretty crestfallen if we didn't have any position at all, having done quite a lot of work, but it was in the nursery. And that's important for our shareholders because they still captured a really attractive return. Our work with investments, the graduation from the sort of nursery to the core, the sort of growing up in the portfolio, that's more a reflection of our work sort of progressing and our understanding deepening and that conviction going up. Where we do tend to work with portfolio holdings and encourage and sometimes agitate and accost is really once they are core positions and we have a bigger stake, a bigger say in the business, and it makes a lot more sense to be more engaged at that stage. And frankly, once an investment is a core holding, we have the level of understanding of a stock, its management team, to really speak from authority and in an informed manner. You don't really at an early stage of due diligence understand a business enough to start sharing opinions on how it might be run or what could be done.
Okay, engagement, accostment, you've got my ear. Is it fair to say that you have a pure active approach to investment management by, say, applying private equity techniques to publicly listed companies?
Sometimes, but not always. We're very happy to just back a good team with a good plan, and our support is just provision of capital to help them do that. And in fact, in many ways, some of those investments can be really attractive for our shareholders on a sort of resource basis because we invest and we support. But there are investments where we are a little bit more vocal. But I would lean away from a temptation to sort of categorize us as activists. We're not. We see ourselves more of a support and a solution for these smaller companies rather than a distraction or a disruptor. If we spot a business that we think is fundamentally flawed and got really serious problems, we'd rather just not invest and find better homes for our capital. But quite often, the level of detailed work we do take a sort of private investors approach to due diligence, very in depth. Some of the findings of that work does leave us in a position to make suggestions to the company or recommendations based on our experience and our findings. And we do seek to work with the company in a sort of lightheartedly call it a sort of velvet glove approach as opposed to a kind of activist boxing glove. Small companies, by definition, have less resource. So to have an engaged, interested, supportive shareholder is often quite welcome.
You mentioned capital earlier on there. So you've had a couple of capital raises since IPO. How have they been received, and will raises be a frequent occurrence?
I think sort of almost by definition, they've been received well because all of them have been a mix of new and existing shareholders adding, and they've really been investor driven. to be able to raise money 3 times and grow the business by sort of 33% over the past 18 months in what remains a difficult backdrop, especially for funds, has been testament to support and interest rather than us raising money because we sort of need to. We, of course, want to grow the strategy over time because we see a massive opportunity to create value for investors that back us. And that's really what we've been doing. We've managed to do sort of 3, as you say, and the fact we trade at a premium probably tells you that there's ongoing demand and support for what we're doing. So I'd like to think they're well received, but let's see.
But of course, you and other investment committee members have a significant portion of skin in the game, so you're all investors as well. How would you describe the investment board? Are they all snow leopards?
They are definitely an endangered species because they are team members with bags of commitment, lots and lots of experience in creating value in their previous business ventures, and put their money where their mouth is, which is very important. Just under 10% of the fund is owned by the investment committee, myself included. We've invested 1.8 million pounds into the fund. That's sort of cash that's gone in. It's not LTIPs or anything like that. And that's because we believe in what we're doing. We believe that we can generate returns for ourselves alongside our other shareholders. And we believe in it so much we eat our own cooking. It's my major investment from a personal perspective. And that's because we believe we can return 15% per annum for a number of years, and so far we have, if not slightly more than that, which is a really healthy return for any investment, but especially a sort of aggregated portfolio versus the sort of stock specific risks that might be out there from owning direct equities.
So for a number of years, so therefore, what is the aim of Onward Opportunities? How can you make shareholders happy? And would you consider a takeover approach after a number of years?
You sort of asked at the start around sort of the timing and the thinking behind Onward Opportunities. There's 2 things that drive me in life as a fund manager, but beneath what's hopefully quite a sort of jovial and friendly exterior, I'm deeply competitive, and that's all about year in, year out, relative and absolute investment performance. We've done that in our first year. We need to do it for many, many more years to come. And the other thing that sort of drives me as a fund manager is I've always wanted to do something meaningful in life. It's not a dress rehearsal. We have one career, one crack at things, and I want to build a successful return generator for investors, leveraging the skills, my experiences to deliver that for them. So this is very much a long-term project subject to it working and delivering what it says. And what we say is that we'll deliver 15% per annum returns over the long term. And that's what we're day in, day out committed to doing. And we believe we've got the people, processes, and market opportunity in place to do that. Onward Opportunities is technically an investment company. You can buy and sell shares in it, but really it's a business case to make returns for people that invest in it. And there's 3 ingredients to that. A clearly defined market opportunity. Smaller companies are underinvested, under-researched, under-owned, and that tends to leave some good ones mispriced. Great starting point for any business case is mispriced assets. The second ingredient is a strategy. We think, or we've demonstrated we've got a proven methodology to sort of capture a slice of that market for investors that back what we're doing. And I've had sort of 10, 11 years now of working in this style, formerly at Gresham House and now with Onward. So market, plan to address it, and then execution. We have, as you've mentioned with the investment committee, which is quite unusual for a public markets fund management team, we have a very experienced committee opining on investments, reviewing the portfolio, really designed to help maximize upside in the stocks we find, but also avoid risks and pitfalls, the sort of John West sardine methodology.
Okay, so finally, we'll come full circle. Why do you think that your listing warranted IPO of the year, and what have you achieved in your second year as a listed entity?
It probably circled back to one of the first things you said on the interview, which was there weren't many last year, so by default we were in the running. It's pretty unusual for an investment company, investment trust to win IPO of the year. All I could comment is, given the obvious biases, would just be something factual, which is as an IPO, we did what we said we would do. We raised some money, we invested it well, and we've grown as a business and created value. That's what we want all IPOs to do, and we were delighted to see that recognised, against some really healthy competition for that award. Year two, well, we're sort of a few months into it now. Same sort of investment performance is coming through. Signs of life in UK equity markets, which is helpful. The return we generated last year was in quite a severe bear market for AIM. This year, things are looking a little bit more helpful and robust. And reducing political uncertainty, I suspect, again, is helpful. So we're focused on the portfolio. There's a very, very healthy pipeline of opportunities to go for. And it's all to go for in H2. We've delivered 9% so far in the first 6 months of calendar year 24. Our aim is to try and do the same again in H2.
I look forward to speaking to you and finding out if that is the outcome. Laurence Hulse, founder and lead fund manager of Onward Opportunities Limited. Thank you very much indeed.
Thanks so much for your time.